All right,
All right.
Jay, beautiful. I got a picture of your corner. Those are awesome.
Is that better?
I gotta stop and go this morning already. But dude, you beard off. What happened? I was loving that beard.
Man, I figured if I was going to be quarantined for a couple of weeks, I'd come out looking like a caveman. So I figured let me just start over. So
Love it, love it. Oh, so crazy couple weeks here, huh?
yes, and I don't see it getting better anytime soon, man.
Dude, I hate to hear that, but so tell me what actually let's start. Why don't you just tell everybody that's watching a little bit about yourself, kind of do an introduction on your background and what kind of businesses you're involved in right now.
Sounds good. Sounds good. Appreciate it. Yeah, my name is Jay Davis. I'm president of CreditFax. We have a credit restoration company, helps people, go from start to go, help homeowners or people become homeowners. I'm also a senior loan officer with First Alliance Home Mortgage, and I also flip properties. We've probably done about 25 in the last 18 months, so we do it at a pretty high level. So I have my hands in a lot of things, eat, sleep, and breathe real estate. It's all about real estate. That's what we do.
That's great. And that's one of the reasons I want to have you on is like, you got eyes on the current industry in like so many different ways that I thought you could really provide a pretty good angle for a lot of people that are watching, and we could just kind of talk about it. One of the reasons I wanted to talk to you today is last night. So there's a couple different sites that I follow. Some of them are more mainstream. Others are a little bit out there. And there's a blogger that I follow, and like this guy is like playing doom and gloom at the best possible time in the market. And now, you can imagine what he's putting on there. But I read this article about some of the repercussions of the Fed buying this $200 billion in mortgage-backed securities, and how it's kind of triggering some margin calls from these big lenders, and potentially, if nothing happens, which I'm sure there's going to be some adjustments, but could essentially bankrupt a lot of these big companies. What have you seen, on, in the mortgage market? What have you seen in the credit side and stuff like that? There's a lot of things changing every day, so I'd love to hear your take.
Yeah, there's a lot of moving pieces. I've seen in the last 48 hours at least 4 or 5 lenders that we use already go out of business. So we're a direct lender, but we also have a wholesale side. So I deal with a lot of different lenders out there, and I'm seeing them go out of business. I see them changing their guidelines like every couple hours. I'm getting an email on a different bank changing their guidelines, or I have deals out there now with other with realtors, and they're calling me saying, hey, such and such bank just changed their minimum credit score to 680. My client's at a 630. Can you help? So it's changing every couple minutes, it feels like. And I just feel like it's going to get worse before it gets better. But as long as you adapt and change with it, I think, those are the companies that are going to be here for the long haul, as long as you make the necessary adjustments and try your best to minimize risk as much as possible. And, for them to minimize risk, and from their side, they think, let's lend to only people with a 680 and higher because there should be, more creditworthy borrowers. But that really, really minimizes your pool. The average credit score in Pennsylvania right now, average credit score is around 660. So the average person couldn't even buy a new home today with the new guidelines that are taking place if everybody adheres to them. FHA is talking about a 680 minimum. Has it been passed yet? Will it be passed? I don't know. But a lot of people that currently are buying homes won't be able to unless something changes, and something changes quick.
Have you seen any changes to the requirement for down payments?
They're talking about it. Right now, FHA is 3.5%. So they were talking about 5% or even 10%, but nothing. I haven't seen anything passed yet, but they are talking about it because, again, that's going to put more skin in the game from the buyer and less risk on the lender. If that happens, again, that's going to severely shrink our pool because I have a lot of buyers that struggle with the 3.5%. So you raise that to 5 or 10, again, less people are going to be buying.
Yeah. So what do you think? What do you think we're looking at here on a longer term basis? I mean, I think it's impossible to really look at what could happen, 10 years from now. But, at least for the next year, with things in such flux, what do you see for the next 90 days? Let's start there.
So for the next 90 days, there's going to be a lot less applications. There'll be a lot less people buying homes. And the ones that are trying to buy, it's going to be very, very stringent. So I think the next 90 days is going to be tough. It's going to be tough because, the industry still doesn't know the long-term effects of what's going to happen. So it's going to be realtors unhappy because new home purchases are going to shrink severely the next 90 days, unfortunately. Not good for my business, not good for anybody's business, but it's going to happen. It's going to happen.
What are you seeing on the? You said you are flipping some property. What are you seeing on the buy side with people that are looking at your properties? I mean, have you seen a down? I mean, obviously you've seen less volume going through your houses, but for the stuff that you have on the market or under contract, has there been any changes, any fallout?
Not really. So right now, I think I have about 4 or 5 under contract. There was one, and the buyer called, and he was honest and said, "Listen, I really want to buy your home, but what if I don't have a job in 2 weeks, 3 weeks, 4 weeks?" So I appreciate the honesty, and what I did was, listen, we'll extend the contract out a little more because I like where he was coming from. He was honest. He didn't want to back out. He was just scared. So I said, listen, let's try to wait out a little bit. We'll extend your contract, a couple weeks, and we'll see where the industry is there. But, I try to buy in good areas, good school districts. So people are still looking at my homes virtually. I have virtual videos out. So I haven't seen a shortage, but long-term, will they qualify? Because there's a difference in them wanting to buy and can they buy? So, does that make me a little nervous? Sometimes, but I try to buy smart enough to know that regardless of what happens, we'll still be able to sell. We'll still be able to make, a decent profit.
Yeah, it's so interesting when you look at the market and all of the pieces that go into a real estate deal. Like superficially, it's like, oh, well, you just find the right house and you go get a mortgage and you're ready to go. But, we're in a situation now where like title companies are getting really creative on being able to operate in an environment that is, uncertain for sure. You got lenders that look. In our Maryland branch, they were working with a title company that they started implementing virtual notaries into their closing protocol. And before they did it, they did a smart thing. They reached out to their underwriters and said, "Hey, look, what do you think about this?" Well, the banks, they want a wet signature. Of course, I would too.
Yes.
But it's kind of tough to get a wet signature without passing a virus with a pen or sitting at a table with somebody. In another article I was reading yesterday, Congress is trying to pass a bill right now that would make all U.S. notaries, it would give all of them the ability to notarize things virtually. And, that's kind of, it's kind of cool, forward thinking. But man, that also opens up for a lot of fraud.
It's gonna open Pandora's box. I'm telling you, because once people get hints of it, they will figure out ways to manipulate the system. Yeah. And nothing against notaries, but you go online, you take a course. I've been in many, many closings with mobile notaries that I had to dictate the closing because they didn't know what was going on other than sign here, sign here. So yeah. I could definitely see some fallout or definitely see some fraud with that. It might be a temporary solution to kind of help us out in the industry, but long term, I don't know how that's going to pan out.
Well, and so like that's one piece, right? You got the title, and in some areas, thankfully there are some markets where most of the title search information and is public information you can pull online. That's really helpful. But like you got all these municipalities closing. And like, how do you
courthouse
the info?
And there's a lot of counties that aren't online yet. I know where I live in Lebanon County. So a lot of the systems aren't online, which is fine. But if the courthouse is closed and they're not accessible online, how do we get information? You don't.
Right.
You don't.
Right. Even so, it's like even if you got the mortgage, you found the house, you're qualified to buy, you got the cash.
There's a lot more things going on, even for appraisals. There's some appraisals that are still going out, but some aren't, and they're kind of leaving it up to them. So I order appraisals. Some might pick it up, some might not until this virus until it passes. So the appraisal might be slowed down.
Well, on that note too, it's kind of funny. Like, how do you pull comps on a property when nothing's sold? Like the longer we go in this quarantine and like the shutdown, like you need some of the numbers your look, we're the last day of the first quarter of 2020, right? And this is the lowest volume quarter in anybody's memory. The longer this goes on, we're
Until
gonna
the next quarter.
right. I mean, tomorrow's
Right.
the next quarter, and like, what are we looking at? Like, we got to look at back 180 days, and all your comps are 6 months old. You know, like it creates a real problem. The whole industry has really got to adapt and change, and you know, it's going to be interesting to see how things play out over the next year. I think we're at some good indicators, and hopefully we're all being reactive and a little scared right now.
Yeah, but I like what you said. I like what you said, adapt and change. And a lot of people can't do that. I mean, a lot of people adapt and change is they're not good words in Central PA. And you have to, from an appraiser standpoint, from an underwriting standpoint, from time, you have to be able to change with the times. And some people don't do change well. And that worries me from an industry standpoint because, you know, as a lender, I can't control all pieces. And the pieces that I can't control, I don't know.
But exactly, and it's tough too when you get a yes that becomes a no. You know, it could be 5 hours later, or maybe it's 15 days or 30 days later. You're like, you know, this is a couple of years ago, but I used to do a lot of wholesaling, and guy called me. It was probably 2010, and he had 15 houses, investment properties that he had left. At one time, he had 100, and he decided he's going to move out of the country, so he starts selling them. All of his properties were under contract. Most of them closed. He had 15 left that were under contract, and the day before settlement, the subprime mortgage market disappeared. And all of the houses, they're like, sorry, can't, you know, too bad. And he was left to these 15 houses. And at the time, he was living in the Dominican Republic. So, like, I was working between him and his bank to try to work out some kind of deal so that we could end up flipping them, you know, and wholesaling deals. But it's really insane. Some of the implications that, you know, Congress makes a decision and all of a sudden the whole industry is flipped on its head. And it's like everybody's got to scramble. You've got real world implications on things that really, like you said, you don't have control over. It could
Yeah,
be.
I mean, I have buyers right now in my pipeline. They're approved. We got the commitment. And right now we're struggling to get them closed. So the one's supposed to close tomorrow, and they're coming back and saying back in DTI 54, we need under 50 because right now our investors aren't buying anything unless it's under 50. So now I got to scramble to figure out what he needs to pay off, and does he have the money to pay it off when he's already been approved, moving truck ready, took off work, and it's like crazy things that are out of, and it's really not in anybody's control because at the end of the day, you book the loan, the investor has to buy it. And now they're being stricter, saying, listen, I need to under this, I need this, I need this. And I hate when it has customer impact. It can stress me out, have me going crazy. I don't care. But when it has customer impact, that's when I get bothered because it's not their fault. But I try to let these realtors know, you know, we're in uncharted waters. This is something that we've never dealt with before. Like I was around when the last crash. But I told a realtor the other day, you know, he's like, yeah, I do this all the time. And I said, have you ever done it during a pandemic?
Exactly.
You know, that's a no. So we can't expect things to be the same. We can't expect it to be the same.
It's exactly right. It's exactly right. Yeah. One thing I was talking to my kids last night about kind of everything that's going on, and brought up an article I read from Ray Dalio. Are you familiar with him? He's a hedge fund guy. Yeah. So he published a what was it? A research paper online about the current debt cycle, like a 75-year debt cycle, and he had some really interesting takes on, you know, what's happened in the market. A little bit scary, but the point and the takeaway I got was, just because something didn't happen in your lifetime doesn't mean it'll never happen. You know, like.
Agreed.
You know what I'm saying? Like, it wasn't 100 years ago when we had bread lines, you know, and thankfully this is going on in the entire world. And I think at the end of this evolution, the end of this change, we're going to walk out to a totally different world.
We are.
Whether it's from in the education standpoint or housing or finance or whatever, I think we're going to be walking into something that we really don't know what it looks like now. And it's really important just to, you know, realize the things that you can have an impact on and things that you can control. And there's a lot that you can't. You know, it's like,
Yeah, we have to learn from it, and we have to adjust along the way, because we'll drive ourselves crazy if we don't. So we have to adjust along the way and realize that there's things that we can't control, but as long as only thing we can control is how we respond to things. As
that's
long
right.
as we do it in the right way and we learn from it, we grow from it, and we stick together, we'll get past this
It's funny you said that. Judah Hoover, I was talking to him yesterday. He said the exact same thing. He said, look, life is 10% of what happens to you and 90% of what your response is. And
thing.
it's so
Exactly.
you just,
Exactly.
it's like, you just got to realize, like, hey, it is what it is. Move on, pull your pants up and get back to work.
No, people try to give too much energy to things that you can't control. So why give it your energy? You can't control it. There's no reason. You're just going to stress yourself out, make yourself old, give yourself a heart attack. There's no reason for it.
So, all right, your credit counseling stuff that you do. Talk to me about that. So let's put this in context. You're saying that credit, the banks are requiring higher credit. They're requiring a bunch of things. What kind of activities do you take with your clients to help them with their credit, and like, what can they do now? Like, maybe better than any other time in history, or
I mean, credit is more important now than ever before, especially if you're trying to buy a home. And I mean, the good thing about it is that there are professionals like myself that are here to help. And most people don't know that. Most people, I have bad credit. What do I do? My lender told me to get a secure card. Sometimes that help, but is more to it than that. So, I mean, in a nutshell, we go in, we look at anything derogatory, anything that's hurting them.
Yeah.
And the goal is just to kind of, I don't want to say remove it, but we go in with a plan and implement a strategy to minimize it as best as we can. There's so many, and basically, as per the Fair Credit Act, there are certain things that can and can't happen. And
you're good.
almost somebody was dialing in, but yeah, what normally happens is there's things on there, whether it's yours or not. It's not about what's on there; it's about was it put on there the right way. And there are certain steps that have to take. So we go in there, we take a look at it, kind of diagnose the situation, and we go in and I don't want to say get all the yucky stuff off, but that's pretty much what we do.
Mm-hmm.
I'm going in and we're going to get everything negative and derogatory off because it was either A, not put on the right way, or B, for example, medical bill. Real quick example. You go to WellSpan Medical, you get surgery done, you sign a paper for them to consent to bill you. Wonderful, everybody's happy. You don't pay it for some reason, insurance doesn't cover it. 10 months later, National Recovery has it. You have no legal obligation to pay National Recovery. You sign something saying that WellSpan can bill not National Recovery. So I go in and talk to National Recovery about how can they collect on this. Show me where he signed. They can't because they don't have it. What services were performed? They can't show me that as per HIPAA. And if they do, that's a bigger problem. So it's like these third-party companies that are killing our credit. I don't want to say what they're doing is illegal, but for the most part, it is. So we go and we get it done. I mean, our success rate, and it's I'd say 90-95%. That's the only reason I fix credit is for homeownership. My whole goal, my whole premise is for people to get the American dream. And I saw years ago that credit was a huge obstacle, so we decided to step in and try to help people. So they come to me, we analyze it, diagnose, and we get it done. Right now, our methods are taking, I'd say, we're getting them done as quick as 30 to 60 days.
Okay, that's great. That's great. So,
and now we'll be the difference taking them from that 640 to that 680. And part of it is education piece too, because we let them know what you can and can't do, where your balances should be. Hey, I need you to pay this down. Hey, keep that under. There's a lot of there's an education factor that people don't know. So we fix it, we educate them, we hold their hand until they get the house.
Yeah, I mean, it's like going through and getting your first mortgage. Like the first time you do it, it's really complicated. You think you have everything under wraps, and then you realize you need, all this additional paperwork, and everything's got to be verified. And buying that car 2 days before closing is going to really
that's going to kill everything. I deal with that all the time. You got to hold their hand. You got to educate them and let them know. But people don't know what they don't know.
Right.
So it's like it's our job to educate them, let them know. And the realtors, they do a good job of that typically. Hey, you don't do this. Don't let anybody pull your credit. Don't buy furniture yet. Everybody wants to buy furniture a week before closing. And I tell them, how about let's get the house first? And then we'll worry about the furniture. Because you buy the furniture now, we might not get the house to put it.
Yeah. So, okay. So from the lending side of things, you mentioned something here that I always like to get people's take on, because I've worked with agents that are absolutely amazing, and that, you know, they sell on my rehabs, you know, certainly faster than I could, for way more money than I could, get more eyeballs on it, all that kind of stuff. And then I've had the opposite. You know, what kind of stuff have you seen? Like, what do you see if somebody is thinking about going out and buying a house when this whole thing is done? What would you recommend looking for on an agent, either to list their house or to, you know, a buyer's broker or buyer's agent to represent them during the sale?
Um, that's a good question
Right?
because
It's a hard one because there's a lot of
it is,
agents out there, right?
there's a lot of agents out there, and there's a lot of there's some good ones and there's a lot of bad ones, and they make a bad name for the good ones. So you know you have to do your research. I mean, me personally, once I start the credit process and I see we're going to the mortgage process, I typically try to hook them up with a realtor that I know, like, and trust, somebody that I've done a lot of business with, because I have buyers come to me with agents, and it's like we start working together, and I realize they're not the best agent just from my experience, and it's just like they make my job twice as hard. So to answer your question, I would ask around. I would get referrals. I would talk to somebody. You know, if you want a particular lender, hey, have you used this lender? You know anything about them? Because there's millions of them out there, but there's only a few good ones.
It's true. It's true. So we're getting close to the end here. So I want to ask you one or two more questions. Do you work with investors when you're whether it's through, you know, construction loans? I know that's probably a little bit outside of outside of the realm right now in the current, you know, the current housing market, but with refis and things like that, is that something that you work with people on, or are you more on the retail end?
More on the retail end, we will do refinances. If it's a primary all day, if it's investing, it's a little bit harder. But you know, I always refer them to some of a lot of the flippers that come to me. I'll refer them to some hard money companies. But yeah, as long as it's you know, primary residence, or you know, second home, or you go from FHA to conventional, then I can do it.
Okay, that's awesome. That's awesome. So how do people get in touch with you?
Best number for me, again, Jay Davis. I'm with Creditfax and First Alliance Home Mortgage. Phone number 717-813-6409. Shoot me a call, shoot me a text. I would love to connect with people. You know, we are in crazy times, and I'll do my best to help you out and kind of guide you through it in any way I can.
That's awesome. Jay, I really appreciate being on the call. Hopefully everybody watching, you got some really good, valuable information out here. I'd like to, you know, kind of touch base with you again, even if it's on a little bit of a shorter call, maybe in a week or two, and just kind of
we can definitely do that. We can.
You know?
I'd love that, my man. I'd love that.
Awesome. All right, guys. We'll see you again next time. Jay, thanks a lot for being here, and we'll talk again soon.
Hey, thanks for having me. Have a good one.
All right, my pleasure. See ya.